Good afternoon, everybody. This is Todd Mitchell. It is Tuesday, October 21st, and let's look at the U.S. dollar, Japanese yen. As you know, we brought this trade up to pretty much break even, pretty much break even at 106.45, and as you can see, today sold off to 106.24. Pretty much broke even on this trade, didn't make anything, although we got almost a full point out of this. Right, almost 100 pips from the entry, and we were just trailing it up a little bit before it got to our first target at about 107.61. Didn't quite get there, went up to 107.38, kind of slipped back, took us out. That's fine. Let me just show you a couple really nice trades that we took in the premium 1K day videos that I put out for the paid subscribers. One of those was the VRTX, Vertex Pharmaceuticals. This trade was just a classic trade. You don't see this happen very often, but when you get a market with two consecutive days, right? Two consecutive inside patterns, right? Two consecutive inside bars down into a logical support zone, right? Right down in here, hit the 50 exponential, blue action zone, touch that gray action zone. You get a great trade when the market really sets up. So we went long right down in here. We've got about 5, almost 6 full points in this trade so far. So this is a nice trade. Again, those are trades that we look for. We scour the market to look for these types of trades. Of course, as probably many of you, if not all of you know, when the market pulled back, we got this correction, okay? Right here we're looking at this market is the, I'm having trouble with my computer here, right? We're looking at the SPYs here, okay? Of course, the market took out that 200 exponential moving average, but look at the market right in here, okay? When you calculate a 10% correction on the overall market from, let's say, the E-mini S&P 500, we pretty much nailed it. A 10% correction, okay? And look at this move we got up off this low here, okay? At the 10% correction, huge, okay? Big rally up into resistance now. But what we did was we were long not only calls from about right in here, but long the SSO, which is pretty much the same as the SPY, right? SSO is the ETF, so is the SPY, but the SSO is 2 times, right? It's the ProShares Ultra S&P 500, the SSO, whereas the SPY is an ETF. It's a spider, right? But of just 1 time, so it's pretty much the same, right? So what we did was as the market was dropping down, okay, into this area right in here, as the market was coming down, we sold weekly puts. So we collected about $1.04, right? $104 a contract. We collected it and we were put the ETF right down in here. Got put, and look at this. We're long this market. So we're having a really good trade. So we've made money on the put side. We bought some calls. We're outright long the SSO. So we are definitely long this market overall, okay? A big exposure to the upside from down in this level right in here. So we're going to trail that up. Now look at what we have going on. We've got 2 days where we got, well, look at this. That's a nice gap, right? This is a breakaway gap in my eyes, right? Well, we're not going to know that exactly until the next couple days here. I mean, I highly doubt the market actually takes out today's low in the next couple of days. If the market is able to take out today's low in the next couple of days, then I think we get some type of back and fill of some sort. Do I think we're going to come back down to this low? No, I don't think so. I actually think we're going higher from here. But I think the big telltale of what we do is, does the market attempt to try to fill that gap from Monday's close to today's low? Okay, so if any of you are long the overall market like I am, my stop now, my trailing stop, trying to look for that bigger move to the upside, is below today's intraday low. Whether or not you trade the SSO or the SPY, doesn't matter. My stops on a trailing stop from being long a few days back, right in here, my stops go below the low, because classic technical analysis, if the market's able to push higher tomorrow and break up through today's high, then I seriously doubt we're going to see the market fill that gap anytime soon. But that's just my opinion. Nobody knows for sure, of course. You need to be conscious of the fact that the market is pushing up into resistance, right? I mean, we're back. So we've broken clear through that 200 exponential, right? After breaking down through it, we've broken back up through it, okay? So we've broken up through that 200 exponential moving average like a hot knife through butter. Right back up through. We've got a nice exhaustion gap from yesterday's close and high to today's low. We're up big time, but we're between the blue action zone right now, and we're clearly right between that 50 and 60% retracement from the market's all-time high down to that correction low that we put in place 4 days ago. So we're at a critical level right now, but I seriously do not think we will break down through today's gap. If we do in the next couple days, then I think we see a back and fill. But if we don't see that, I think we continue heading higher. Okay, hope that helps. Have a profitable day, and I'll be back with you tomorrow. Bye.